Welcome back to the 980s podcast hosted by yours truly, Kevin Thompson, founder and CEO of 980 Capital Group. Thank you guys for joining us. As I always say, subscribe to the channel. As I always say, go and get my book, please. MLB to CFP live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@9icapitalgroup.com. Send us your questions or you go to the website at www.9icapitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, and engage. And today we're talking about the expiration of the TCJA, what it means for you, the small business owner, how it impacts you longer term, and things to consider. This is not a political podcast. No. This is facts over feelings, and I'm here to tell you the truth. Let's get it. So I was doing a little bit of digging. You know, I'm a little bit of a sleuth in my day. I'm Inspector Gadget, right? So doing my own financial plan, and yes, financial advisors need to be doing their own financial plans or having other advisors do their financial plans for them. And I was doing my own financial plan, and I noticed that in 2025 to 2026, my tax rate goes up 55%. I was like, yeah, that's curious, but I already knew why. It's because the Tax Cut and Jobs Act expires. Interesting. So how do I successfully engage the individuals that this impacts? So this is for small business owners, the S Corps, the partnerships, the sole proprietorships in the United States that want to know exactly how this is going to impact them moving forward. Also understand that over 50% of the companies in the United States of America are sole proprietors and S Corps. One single member LLCs, quote unquote. So understand that a majority of the businesses in the United States. So this is going to impact the majority of the small business owners. So let's talk about the Tax Cut and Jobs Act. So the Tax Cut and Jobs Act, let's just start here on what it actually is a piece of legislation that was signed into law by President Donald Trump on December 22nd of 2017. It represents one of the most substantial overhauls of the U.S. tax code in decades. And here are some of the key features: individual tax rate changes, corporate tax reduction from 35% to 21%, pass-through deductions, increased section 179 expensing, bonus depreciation, limitations on interest deductions, repatriations of overseas profits, changes to itemized deductions, estate tax exemption increases. Okay, we get all of that, right? I said a lot in a little time, which is fine. But if a lot of these things weren't made permanent, like a majority of these things were not necessarily permanent, like written in stone, they weren't Moses with the tablets and written in stone. These were not permanent changes to the tax code. So let's talk about 5 key components that you need to consider that will impact you immediately beginning in 2026. So 1, increased tax rates. One of the major benefits of the TCJA was the reduction in tax rates for small businesses like myself, particularly S corporations, partnerships, and sole proprietorships. Like I mentioned to you earlier, these companies make up a majority of the companies in the United States of America. Single member LLCs make up the majority of the companies inside of the United States. So if the TCJA expires, these tax rates can revert back to pre-TCJ levels. This means you can see a significant increase in your tax liabilities, reducing your net income and cash flow. Now, I always want to go back to this. This is a facts over feelings type of show today. This is a facts over feelings. This has no feelings, no political slant, no emotions involved. This is strictly from a small business perspective. How does this impact me moving forward if this were to expire? Now, this also means that it doesn't mean the next party in place, if the Democrats or Republicans or what have you, will allow them to expire. Doesn't mean that's going to happen. There could be legislation that comes back on top and says, okay, we want to keep these in place. I don't know. But ultimately, based on the facts today, this is what's going to happen to us, the small business owner, if we allow these to expire. So increase tax rates. Next, the reduction in the Section 179 deduction. The TCJA significantly boosted the amount you can immediately expense under Section 179 from $500,000 to $1 million. This change allowed business to write off the cost of certain property like equipment and software in the year it was purchased rather than depreciating it over time. If the TCJA expires, the limit could drop back to $500,000 or lower, reducing the immediate tax benefits of making business investments. So basically what it's saying is that it doubled the increase, the allotment to the Section 179 deduction, allowing you to immediately expense those investments up to $1 million. So they're basically saying they're going to drop it back down to $500,000. Could that be significant? Well, I don't know, because like I said before, single member LLCs and small business owners are a majority of the people that are working in this space. So for a majority of people, this may not be a big issue, but for the larger entities that are more significant in size, then yeah, it could definitely have a larger impact. Third, this is by far the most important to me: the end of the qualified business income deduction. Substantial benefit of this TCJA was the introduction of the 20% deduction on qualified business pass-through entities, QBI. It's by far been the biggest help for small businesses. This deduction has provided significant tax relief for many of us small businesses. However, if the TCJA sunsets, this deduction will disappear, leading to higher taxable income and increased tax bills. Hence, when I mentioned to you previously that my taxes go up almost 55%, this is a portion of that because I'm no longer getting the QBI. Very, very significant deduction that I think is often being, well, it's not often being overlooked. It's not often being overlooked by people like myself, because we see the benefit that we get from that. But it's something that will need to be addressed moving forward. The fourth thing, which is not necessarily our issue as a small business owner, because I'm not a C corporation, but for those of you running businesses structured as C corps, this TCJA lowered the corporate tax rate from 35% to 21%. If the TCJA expires, we could see the corporate tax rate climb back up to, say, 35%, which would eat into the potential profits and maybe affect even unemployment. Who knows? I'm not saying it's going to be, they're going to allow it to happen, because that's a huge jump. That's an absolute huge jump. And there probably will be concessions depending on who's in the house. But again, your corporate tax rate may go up back to 35% if nothing's done. And finally, this doesn't have a big of an impact on companies like myself, but the TCJA allowed businesses to immediately deduct 100% of costs of eligible property, such as machinery and equipment, in the year that it was placed in service. This is known as bonus depreciation. If the TCJA expires, the percentage of bonus depreciation can phase out or reduce, which would impact your investment strategies and financial planning. So, what does this all mean? What does this mean for people like myself that are business owners? We have to stay informed on what's going on in the political spectrum, because again, this is facts over feelings. This has nothing to do with my political stance on whether I'm right-leaning or left-leaning or center. It doesn't matter. This is strictly, hey, if A plus B equals C, then that 1 plus 1 equals 2, right? This is just facts over feelings. And regardless if you vote with your pocketbook, regardless if you vote with your emotions, or regardless if you vote with your civil liberties, we have to understand that there are some things that are going to impact several small business owners in the United States of America, which have been good over the last decade. Will there be concessions in the future? Likely. But as of right now, we can't count on those concessions based on the fact that nothing's been done. So, in conclusion, the TCJA is going to sunset in 2026 or sunset in 2025 and stop in 2026, which means that our taxes will likely go up. The QBI will likely go away. Bonus depreciation will likely remove itself. C corporation taxation will go up from 35 to 35% from 21%. And of course, increased tax rates across the board because we have higher taxes. Now, this is, like I said before, this is not a political slant. This is just facts over feelings. Thank you guys for joining the 9 Innings podcast. Subscribe to the channel. Go and get my book, MLB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@9icapitalgroup.com. Send us your questions. You can go to the website at www.9icapitalgroup.com. Schedule your appointment. As you know, we're here to do what? Educate, empower, and engage, and stay informed. Thank you guys again. Stay humble, stay safe, my friends. I'll see you again soon.